Welcome back, everyone. Still looking in chapter 9 right now, finishing up chapter 9 with the last lesson of this, journalizing other transaction using a general journal. So if you think about this, we're on our journey. We're looking at a merchandising business. We've worked already with a purchases journal, and that's used only when we purchase merchandise on account. We then started working with a cash payments journal, and again, we use it exactly what the name says. We use it when we have paid cash. Again, if we don't pay cash, we don't use the cash payments journal. If we didn't purchase merchandise on account, we don't use the purchases journal. Now, remember that quick little hiccup that we came across? What happens if we paid cash for merchandise or purchased merchandise using cash? That's our cash payments journal. Even though we're going to use our purchases account, we're using that in our cash payments because we paid cash. Only when we purchase merchandise on account do we use the purchaser's journal. Last one we're going to look at now is, okay, now what happens if we have a transaction that doesn't fit into the purchaser's journal and doesn't fit into the cash payments journal? Well, you're going to see a memorandum. Remember these things for memorandum? Okay, so then, therefore, we're going to use our general journal. Okay, if it doesn't fit, you'll see as we kind of get there, it won't fit. If it doesn't fit, we will put it into our general journal. We have 5 total. So, bought supplies on account. Again, I'm not going to spend a lot of time on this transaction because you can see this. There's a couple little changes for you here that I just want to kind of point out. And again, you've seen this before. This transaction should not be new at all, okay? But we bought supplies on account. The thing that I want to point out to you is this. Notice it's our M, right? And M, as our little indicator, says multiple lines, right? So we're using our multiple lines, okay, in our general journal. Little trick for you. Remember that from way back in 1 through 8. Here's the one change. In the past, we have used just accounts payable Gulf Craft Supply. Now we need to put a slash there. And the slash basically means this, and this will explain more when we get into the posting of this. The slash simply means that this number here has to get posted to 2 different places. And the 2 different places that it gets posted to is accounts payable, the controlling ledger, and the Gulf Craft Supply, the subsidiary accounts payable ledger. So that's our little indicator to us that we have to post that in 2 different areas. We'll get into that a little bit more, but we have to have that slash. Here's your quick tip. If you notice a slash in the title here, put a slash in the post reference so you don't forget to post it. 2 different times. Okay? Our supply store stays the same. So what happens now if we purchase things? So if we're purchasing things, very common thing that could happen is I might purchase something and I might be like, ooh, I think I got to return this, or something was wrong, it was dented or merchandise. Well, then I'm going to get what's called a debit memorandum for purchase returns and allowances. So I'm going to actually use my account, which is a purchase return and allowance, and basically that's a contra account to my purchases. So it's basically going to just show that. And I need to keep track of this as a business because I need to know how much was returned, how much wasn't. Do I have any allowances? We'll get into that. So again, purchase merchandise on account, Return merchandise to Crown Distributing 252, covering purchase invoice number 80, debit memorandum number 78. Okay, again, here's our debit memorandum, DM, there's that M again, multiple lines. Very simple what we're going to do. And all we're going to do is we're going to reverse that transaction. It acts as if almost kind of like we're paying, but we're not. Because now if you think about what's happening here in this first transaction right here, we're going to debit the accounts payable account distributing. Again, there's that slash, okay? Don't forget those 2 things that are there, okay? I'm going to debit it 252. Why am I debiting the accounts payable? Because I don't own 252 anymore. I need to take that off the total amount that I owe them. So therefore, I'm lowering that accounts payable, and I don't own as much. I own $252 less than what I previously did. Okay. Now, but I didn't pay cash. How did I lower it? Because I have a purchase return and allowance, and I'm going to credit that. A purchase return and allowance is a contra purchase account. It is designed to lower the book value of purchases. It'll make more sense as we move on in the trimester. Just understand that it's designed to lower that. It's the book value. It has to do with the financial statement. Okay, so again, how do I do this? I'm going to write the date. I'm going to write the account title, the vendor name, run a diagonal line in the post-reference column. I'm going to write a debit memorandum number. I'm going to write the amount. I'm going to write the purchase returns and allowances, okay? And then I put the amount there. Very, very simple, very, very straightforward, okay? And I'm good there. Again, just kind of a couple things here is it's purchase return and allowances. Remember your slash, and that should help you. So hope this helps. If this did, if it does, if you enjoy these videos, please remember to click subscribe and turn on your notifications. Take care. See you soon.